Like growth is not going to happen. You're going to read a bunch of articles on TechCrunch or whatever, where you're seeing startups raise billion-dollar rounds and you're sitting there and you're still seed stage founder. Stoicism, like play the long-term game. Like think about where you're going to be in 10 years and not 1 year, and like get comfortable having bad days. What I kind of came to after these like 30, 40, 50 books in a summer was life is about one thing, and that's experience. That's just exciting for me. Like you should never know what the future holds for you. You should just like live every day like it's your last.
That's product market fit.
Product market fit.
Product market fit.
I called it the product market fit question.
Product market fit.
Product market fit.
Product market fit. Product market fit.
I mean, the name of the show is Product Market Fit.
Do you think the Product Market Fit show has product market fit? Because if you do, then there's something you just have to do. You have to take out your phone. You have to leave the show 5 stars. It lets us reach more founders and it lets us get better guests. Thank you.
Sahil, welcome to the show, dude.
For sure, man. Thanks for having me.
Dude, so you're 22, your founder's 20. You guys just raised like a $17 million Series A, raised an $11 million seed round, not long ago, I think less than a year ago. But you started this in 2021, which means a few things. First of all, it's actually been like a decently long journey to get here. And second of all, you were like 18 and your founder was 16 when you started this, which is just absurd.
Yeah. I mean, we're like the epitome of businesses aren't built overnight.
So let's walk through that, man. Like I'm curious. I mean, I just remember myself in high school. Like like I was not ready to start a venture scale business. So I'm curious to see what's happening in that. Let's start at the beginning, right? Like 2020, 2021. What's going on?
I actually started my first company in high school. Like what's quite interesting was I'm one of the lucky people to know what I wanted to do for the rest of my life pretty early. And what I mean by that is in high school, I was stuck in the rat race of like going to the best university. So like my dream school at Stanford, I wanted to be valedictorian. I wanted to get like the best SAT scores, like do the best in school. And I was like working really hard to make that happen. And then COVID.
So that you could be what, by the way? Was it lawyer, doctor? What was it?
I just wanted to study engineer, like be comp sci. Like it was kind of appealing to me. I was coding at the time. So like an engineer, didn't know where else I wanted to take it with. But like I liked coding. That's all I really knew. When COVID happened, it was the first time in my life where there was no more stimulus to chase. Like what I mean by that is like oftentimes we all get caught in the wind of life. We're all leaves where like you just go on with the wind, right? And that was me. Like I was looking for the next test, the next club, the next thing to do for college applications. When COVID happened, it's like there is no next. You're like, oh, look, during COVID, it was a weird time. It was like, oh, all your tests are canceled. Oh yeah, all school's canceled. And you're just like, oh, okay, like what do I do for the next 6 months of my life? So when that happened, I was like, I actually like fell into like an existential crisis. I was like 16 at the time. Because I was just like, what do I do next? Like, what do I actually do?
And you're
like,
what? So this is what, grade 11?
Yeah, grade 11.
Okay. And where are you? Which city?
In Charlotte, North Carolina.
Okay.
So like, I'm like questioning what do I do? And then like, it led me into this thought where I was like, what do I actually know about anything? Like, I don't know what I truly want to do with my life. I don't really understand why I'm here. Like, I don't understand what I'm going to do. What does 10 years look like for me? I don't know, which is a daunting thought. So I fell into this existential crisis. Then all summer, I started reading books. Look, I was like a monk. I was just reading all day. So like, I was reading like philosophy, history, biographies. Like,
things are still pretty shut down, right? Like, I mean, this is what, June 2020, July 2020, right?
You can't go anywhere. You pick up food from restaurants, you play tennis, social distancing. I'm sitting there reading books in like my patio.
It's actually crazy time, just like as a high school. I mean, obviously we all went through it at different ages, right? Like, but as a high school student, I just think back like, yeah, it's a wild time to go through that.
Yeah. I mean, I think it was the first time in everyone's life where like society's like norms were all broken. Like how we've all operated our lives, you had to change, which is like really surreal. Like even I still look back at those times and I'm like, wow, like that was a really weird time. Like social distancing, wearing masks in public, and saying no to hanging out because you're like scared that someone has COVID. Like totally different times.
And what pulled you? I'm curious on the philosophy side. Was it like the existentialism, like the Sartre? Was it that kind of stuff?
The existentialism, right? So like I was trying to get perspectives on what life truly means. Um, and what I kind of came to after these like 30, 40, 50 bucks in a summer was life is about one thing, and that's experience. Like that was my takeaway from that summer. Like, why do we like eating different food? The experience. Why do we like traveling? The experience. Why does Elon Musk want to go and make us a multi-planetary species? Because it's fucking cool. The experience, exploring another planet. So what we as humans innately is like what we love to do, chase experiences. What is the single highest leverage function I can do for myself? And in turn, it can impact society and change others' experiences for good. In entrepreneurship, ran that calling. And specifically, when I read Steve Jobs' biography, that really was what kind of pushed me into being very compelled by entrepreneurship. But like, this guy was not supposed to walk the path of life he walked. He was like an orphan. His parents were not entrepreneurs. They were like blue collar workers. He was a monk for a year. He grew up in like or he went to college in Reed College, I believe. But nothing.
Sorry, typography. You know what I mean?
Typography, right? There was nothing that was telling you that this guy was going to create the largest company in the world. Like no signs pointed to that direction. Yet he walked a path of life you could never replicate. Look, I will never walk that life. You will never walk that. Elon Musk will never walk that life because it's a unique journey. And that's what's compelling to me. Look, if I were to be a lawyer tomorrow, most lawyers, not all, but a lot of lawyers have very similar paths. We study for the same exams. We stress about the same things. We all have that one corporate client we hated for a corporate lawyer. And look, we have these shared experiences. But like entrepreneurship is like one of those things where like, we don't really have shared experiences. It's like, oh shit, like you got sued by the US government. Like, yeah, I can't say the same thing. And that was what's super compelling is you get to create these independent variables of like new experiences. And that was super compelling. And then like the best part of it all is you get to you have the opportunity to create those independent variables in other people's lives. Like now I get to take the fruits of labor from Steve Jobs because I have an iPhone. And like that's created a million experiences for me that like I would never have gotten luck meeting Aaron. If Instagram didn't exist, I would never have met Aaron. So like just think about that optically. Like he created an independent variable in my life. So when I knew I wanted to be an entrepreneur, I was like, let me just start a company. I know how to code. I'm not trying to start Apple, but I'll build
But to be
websites
clear,
for restaurants.
what drove you then? It wasn't the money, at least then. It was really the combination of things. At least if I'm pulling the right thread, like one is you call it experience. I don't know if you've read Viktor Frankl's book. I think it's called like something about meaning. I forget, but one of the most powerful books I read. It's all about his philosophy is that the thing that we're all after is not happiness or power, but it's really meaning, right? And like that's why people put up with so much. That's why people go to war. That's why whatever. So it's like you call it experience. I mean, I might call it meaning, but it's that kind of an idea. And the other one is this unique path, like just chart your own course. It sounds like that was the other thing that compelled you.
Exactly, right? Like both of those things, meaning, purpose, experience, and just like I don't want to know what I'm going to be like in 10 years. I think that's a really depressing truth. Like if I know where what Sahil's doing next year, even that scares me. Like I love the fact, like when I was 18, dude, I could never tell you where I'd be right now. Look, when I was 18, I was like, I'm going through a lot of shit right now. Like, that's just exciting for me. Like, you should never know what the future holds for you. You should just like live every day like it's your last.
So you have that idea that you want to be a founder, but which a lot of at that age, like I was in a similar for a different reason. I actually wanted to make money, but similar situation of, and I think it was 22, not 18, but like, I just want to start something, right? I think you have this desperation of like, what's the thing I'm going to start? You know what I mean? Because you don't know that much about the world.
Totally. Yeah. I mean, look, I wasn't starting Apple like Steve Jobs in high school or like Michael Dell selling, like monitors. Like I was building websites for restaurants to add their food items to their menu, right? I was just solving like super small problems that like I knew existed. and I knew how to code, and like these restaurants were using Wix sites or Squarespace that like didn't really allow restaurants to have much modularity. And I tried it out, and it was pretty like I learned a lot. I learned a lot about like how people are really mischievous in business. Like they will not pay you. Sometimes they won't pay you on time. Sometimes they take advantage of your age and make you do services that the market traditionally charges $1,000 an hour for $10 an hour because you're 16 and you just say yes to it, right? So yeah, I learned a lot, and it was a really I think a pivotal experience. Not because it was a large outcome, but rather like it was every day was different. That's what I was chasing.
You still care about schoolwork, by the way, or you just let that go?
No, I actually ended up like graduating valedictorian in high school still. Like I still cared. You know, Aaron was actually my co-founder. It's actually where I like totally stopped caring. Like he was the lunatic who would like, we need to drop out. Like the first hour I met him, like I literally hit him up on Instagram and he telling me 30 minutes in, like, dude, like this idea is going to just disrupt the world. We need to drop out. Send the resignation letter right now. And I'm like, calm down.
Walk me through that. So you valedictorian, you go into what college?
Berkeley. I was going to study electrical engineering, computer science at Berkeley. At the time, I'd shut down this like dev shop for like restaurants business, and I was building like crypto products for fun. Look, I was building Stripe for crypto, which now apparently sold for $1 billion.
Yeah,
Called
buddy.
Bridge.
That was a good one.
Exactly.
Bridge. They were on the show actually for a crazy freaking story, man. Yeah.
Abrams.
Yeah, exactly. Zach was on.
Exactly. He you know, the difference between him and I is he was like the CPO of Brex, and I was like,
Yes, exactly. That's right. That helps.
exactly. It helps a little. And so I was building this crypto payments product, and I was looking for co-founders. Like I was like, it's pretty boring to build a business alone. And I was like, okay, I'm gonna be the tech guy. Look, I need my business guy. Like it's the traditional mindset of like all startup founders. Like we need to have business tech. So like I was hitting up a bunch of Berkeley kids. Most of them didn't take my stuff seriously, and I don't blame them. It's like 18-year-old trying to start up Berkeley. Like how many of these stories have we heard? But Aaron, it's fun. He was like, let's get on a Discord call, like right now.
But how do you, by the way, like where do you see his, like what do you see that makes you reach out to him?
Oh, he posted an NFT on his story. and I like crypto, right? He was into like the Tom Brady autograph, if you remember, like when he partnered with Autograph, and they would do like signed cards, the autograph cards, and they minted as NFTs, and you'd buy them. So I was like, oh, this guy likes crypto. Let me hit him up and like see if he thinks this idea has legs. So like I hit him up. Within 12 hours, we've like straight up start the company. Like we're building. We like didn't really have any clear direction of a business model for how we're going to charge money, or like who was our right customer, or any of that. We were just like, let's just start this, man. Like let's just build this like crypto payment API thing.
He's 16 in high school then at this time?
Yeah.
Okay.
Yeah, because he skipped 2 grades, I believe. So like
So wait, so is he in high school or he graduated?
he was he graduated. So he
Oh, so
graduated
he's going
at
into
16.
Berkeley like with you, but he's 2 years. Okay, he's a smart guy.
Yeah, exactly. He's smarter than me.
So what happened? So you guys start building, like what's the first product? How does that go?
We're like building all summer, and like you in fintech, crypto, anything like regulatory, you like reach this point where like you actually need money. Could like if you want to do banking services, you need to partner with the bank. Banks are expensive. If you want to like sell crypto services, you need money transmitter licenses. Very expensive. So like you could only build so much. So we hit this tipping point, and we were like, oh man, we got to raise money. We had no clue how to raise money. So we were at Berkeley at the time. So like all summer going into Berkeley, we'd grinded. We're at this point. So Aaron starts like, we start going to San Francisco every day. So like we stopped going, we never really went to class, but we started going into the city every single day, like going these happy hours. And like a lot of times we couldn't get into the happy hours because of our age. So we'd stand outside the happy hours. And then like as people walked in and walked out, we would like grab them. So like, hey man, this is what we're building. And there's like a famous photo on Twitter of us. Like there's this guy named Nick Manwelich, I believe. He started This Week in Fintech, where he used to host these fintech events. And like he had taken a selfie with us because he got kicked out of his event, and it was like me and my co-founder. We were doing this, we were hustling, and we started like getting a lot of traction in the sense of meetings. And like, here's another learning: when you're a young, naive, first-time founder, you think meetings equate to success, which is far from the truth. Like, that is like far from investment decision. But we were like, oh my gosh, we're meeting this VC firm, this
Dude,
VC
it's
firm.
so true. At the
Yeah, right,
beginning, dude,
exactly.
like getting it, like you, like now I'm on the venture side, so like I take so many meetings, but even I'm pitching LPs, like it's just like it's the beginning of potentially probably nothing. But at that age, dude, it's like, oh my god, it's done. Like
You're like, oh my, exactly. You're like, wow, they're on my Google Calendar. Like, whoa, like they won't meet with anyone. Like I must be special, right? So like we were like pumped. We had 200 meetings set up.
whoa,
Fast forward 30 days, all rejections,
dude,
and we're like,
200 for
oh,
real?
200 might be over, definitely 100, like minimum 100. It was in that range. So, like we were hitting up everyone, like angels, small funds, big funds. Look, rightfully so, everyone is passing. And you would think like this is 2021 peak degeneracy. Like everyone else is raising monster rounds, not our age, but like people were. And so we were like, what are we doing wrong? Like this doesn't make sense. So finally, like we meet this investor. And he's like the first real investor, to be honest. Like, dude, yes, I get it. You want to build this like crypto payments app, like whatever, and like disrupt the markets. How do I know anyone wants to use your product? Mind you, this crypto payments API thing evolved into a USDC stablecoin wallet. So like through iteration feedback, like we kind of threw away that idea of like bridge, and we wanted to build like a consumer neobank for stablecoin users.
That's where you were in 2021, which again is actually it's a pretty solid thesis, I think. Like I'm pretty
It's
sure.
a great thesis if you're in Chad or if you're in Syria. It's a horrible thesis if you're in New York City or
Right.
San Francisco with
Right,
the
I got this
Federal
thing called
Reserve.
USD. I'm
Yeah,
good.
exactly, right? So like it's like I wish I was in Africa and doing this because I think it had long legs. Unfortunately, our currency is too stable, which is a good thing, I guess, right?
Good problem. Yeah, yeah.
Exactly, it's a great problem. So like we were pitching this, and finally this investor like, show me proof that people want this. We went around all of Berkeley campus, knocking on dorm rooms, like every dorm room, Unit 1, 2, 3, Clarker, asking people to Venmo us, telling them we will return them 12% on their US dollars. Essentially, we were running like an illegal mini hedge fund where we'd like put their money in DeFi strategies and then like get a bunch of yield and then return it back to them. Kind of like traders. We were like hedge fund traders. It worked. Look, we straight up collected $25,000 in 24 hours. We returned 12% within a week, returned all the capital. Look, everyone was made whole and even more than their principal. We were like, wow, we just need 250 million to do this at another scale. So we go back to the investor and he's just like, guys, I'm going to pass. And we were like, shook. We're like,
What?
Investor told us, yeah, investor told us to do something, we do it and they pass. I wonder why, right? Another learning. Investors generally don't tell you why they pass. They're not incentivized. So we were like, bummed out. We were like, oh, like maybe like we might be screwed. Like we might need to pivot the idea. But we were convinced that like, hey, what if we went from 25,000 to 50,000? And maybe we'll get more traction. So we started ripping calls again. This time, instead of dorm rooms, we were ripping calls in our network. And there's this 18-year-old in New York who'd look, you guys are crazy. I'm not Venmoing you money, but I'll be your first angel investor. And we're like, oh, shit. He's like, be here 6 a.m. New York City tomorrow. So we're like, oh, shit. It's like, we're like looking at our watch. So like, oh, shit. It's like 8 p.m. San Francisco time. So like, we like dart to SF, like red eye, meet him. It's 6, 7 a.m. in Soho. We are sitting down, like sleep deprived. He writes $30,000 check. Within a week, we raised $2 million.
Whoa.
And it was during NYC NFT week or NFT NYC week or whatever. So all the crypto investors were conglomerated in that area. And so
you stayed in town then for that week? Did he like introduce you? Like how did that happen? Like that first 30K and then he made a couple intros?
he made 5 intros, all converted.
Oh, wow.
So we were like, it makes sense, right? Because like the type of investor in his business, young, hustler, crypto. They like crypto.
Who is he?
His name was Abi Bantu, which so he ran this he's running this company called Hike Medical now, which is for foot orthotics. Like it's totally not crypto anymore. But he all his investors liked this young hustler crypto.
He was in the crypto
thesis.
space then?
Yeah.
I see.
Exactly. He was building gasless NFTs at the time. And so it was quite I think they just liked this type of niche, kind of there are certain VCs who like young founders more than other VCs. And so it's why I think our conversion rate was pretty high. So we raised $2 million and we're like, holy crap, this is insane amount of money. And then by the end of the month, we ended up raising 6 million in total from Y Combinator and a bunch of other
So you applied to YC in that time frame?
Yeah. After we raised the 2 million, we applied to YC and we got in. I think I don't want to quote myself on this, but we were one of the youngest founders there. Aaron was still 16, I was 18 at the time. So we thought we got hit with the Midas touch. We thought we were on the trajectory to be like Mark Zuckerberg. We're like, oh my God, this much money raised. This is what's next year?
You probably
60?
were one of the ones that had raised the most too. No, at that stage in YC.
Oh yeah, yes, exactly. We were I think top 10 in terms of amounts raised, and it was funny because some batchmates would be so pissed at that. They'd be like, dude, I'm 10 years AWS, Instacart, freaking veteran, and I'm raised 1.5, and these are two kids, no credentials,
Just
raised 6
complete
million.
degenerates building NFTs and shit.
We were on top of the world.
And by the way, who was in that? Was it VCs? Was it mainly angels besides YC?
It was a party round, so there were tons of investors. It was 30, 40 investors. It was Lightshed Ventures, which is still an investor in every single round subsequently, even in Affiniti now. YC was part of that. GFC, Soma Capital. It was a lot of micro checks, so 250 to 500K checks thrown in there. So yeah, we pulled it off, built the product. January 2022, built the product, launched it.
And this was the USDC wallet, right?
We launched it. I think it was May. We launched officially
2021.
Now 22.
Okay.
2022. It was May 2022. We launched it. We're let's go. We're on top of the world. We just launched this project. We're going to change the world. And then oh my God, the next 60-day sequence, honestly, the biggest life-changing sequence ever, which kind of wired me differently as an entrepreneur. We launch, we get bad press. Our biggest competitor, they write a hit piece on us on TechCrunch. These two kids, they're corporate espionage. They're going through our support flows, asking our support people questions about our business, yada, yada, yada.
They're accusing you copied their product. That was the big accusation.
Yeah, exactly. It was they're copying our marketing terms and conditions, whatever, accusing us of copying them.
Had you?
Their tweet. I mean, look, we were young, we were dumb. We made a lot of mistakes, and I think we were not as original as we were supposed to be. And yeah, we took elements. That company had raised $90 million from Andreessen, L. Catterton. So you think they're doing everything right. And that's another learning in this journey. Money does not mean absolutely anything. VCs will give money to what is a hot commodity, so then someone will give them up round, and you can go to your LPs and say, hey, I'm up 90% on my portfolio. We had none of this foresight. We're just Andreessen Horowitz, these 10 good firms that we know are in, so they must be doing things good. So they are coming after me and my co-founder, oh, you guys are copycats, tweeting at us, it's blowing up. And we have a sequence of just horrible events happening to us. State government sued us, not sued us. That's an over. They subpoenaed us. Subpoena is essentially if you don't cooperate, they will sue. So at all these
about what? What was their big issue with it?
So they thought USDC stablecoins were securities. So
I see. Right.
Certain state governments think they're not securities. They're more commodities. Certain governments think they're securities. And it was why Coinbase also got the same thing as us, subpoenaed. Still to this day, I don't think a dollar denominated stable coin is a security. It's a dollar. In that case, every dollar is a security. But like, that's beyond the point. It wasn't worth fighting a state government. I'll tell you that. So like when you have like bad press, you freaking get subpoenaed. Business model was not working. So like after a TechCrunch launch, you think people are flocking. Nobody's flocking. Our revenue is trash. Like everything was against
I would have
us.
almost assumed that all the bad press would get you users. Funny enough.
It got us users. Here's the thing, like in consumer facing applications, users are relative. If you have 1,000 users, it doesn't mean shit. You need like 1 million to build a big consumer business, right? So like if you're enterprise, 1,000 customers, like bro, you're probably like Series C. Like you have like these like $50 billion companies paying for your services. So like we had literally like 1,000 or 2,000 consumers using us for our wallet. It's like you're making maybe I think 8K MRR at that point. It's like like there and we're not really like it's not really like we're solving a problem. I think like people in the US who used stable coins, we've got a lot of adverse selection because like the only reason you'd want to use stable coins for domestic transactions is if you were like doing something shady, you know, like I don't know, like buying drugs or something. So like we had a lot of fraud and like it just wasn't a good business, like honestly, like and so like we had to look amidst all this bad news and bad events happening. Look, we just straight up had to pivot. Look, we shut the idea down. We fired everyone. Aaron and I moved back into our parents' home. So I went back to Charlotte. Aaron moved back to LA. We were sitting on a boat.
This is also, by the way, like the whole macro starts crashing second half of 22 outside of the stuff that's happening with you.
Everyone's all VC firms are fortunately all our VC firms. I'll say this, were super behind us this entire time. Like even with the bad press, like, and it's why like partnering with the right people matters so much. Is like they never like turned their backs or they never like stopped taking our calls. They're like, hey dudes, like you're young. There could have been a lot worse. We've seen a lot worse. Like learn from this. Learn what you need to fix about yourselves and like come back stronger. You have a lot of money in the bank. Like we still had $4.5-5 million. So like that's exactly what we did. Is like we learned.
And none of them said like, "Hey, why don't you just return the capital, do something else?" They're just like, "Keep going." That's cool.
Yeah, they'll keep going. And you know, I think that's why we're quite fortunate. Is like I had a lot of founder friends where like these VCs started like acting weird. We're like, they're like, hey, like, what are your plans? And like, the founders like, I'm trying to figure into, okay, why don't you return the cash and we'll fund you for your next startup? But like, let's figure it out for like, there are certain, like a lot of my founder friends had like a lot of weird behaviors, like pursuing. And so we never had that, which we're really fortunate about. So like we pivot, I'm at home, but like now I have the biggest chip on my shoulder and Aaron, like we pretty much just got blamed all over the internet. Like, our names were like we're like God, like everyone thinks we're like copycats and like look we're not original and we're like these kids you like can't build and we just copy and like the markets are crashing and like we're crypto kids and like we were like we had massive chips on our shoulders. And I think like this is kind of why I say this was the most pivotal moment in my life is like you really figure out who the fuck you are when like shit hits the fence, right? Like I think most people if you got like a TechCrunch article bashing your name at 18 or at 16, you're that young. Like it was truly like a shocker. Like it's one of those feelings that I'd never felt in my life. Like there's few things in life that don't have solutions, and that was one of those things. Like I didn't know what I could do in that situation. Like I don't have a friend who's been through that. And so like I'm like, fuck, dude, like how do you get through that? And so with all those like bad events, like instead of putting the white flag out, bro, we were like, fuck that. Like, let's get back in the game. Like, we're soldiers, man. Let's go for round 2.
Did you think about, like, that was the outcome, but in the meantime, did you think about just giving up, going back to school, being like, you know what, let me take 4 years and come out the other side sort of thing? Or was that never a thought?
I went through every emotion possible during that time. I was like, oh, fuck, look, my career's over. To like, oh, no, this isn't that bad. To like, dude, I should just go back to school and like join like Facebook. And like, you just have all these emotions swing. But like after like 24, 48 hours, like you start to kind of finally ruminate and like you come to your senses. And like at the end, Aaron and I were just like, fuck that. Like, we're going to build a big business. We're going to come back from this. Like, the fact that the company that raised $95 million was even worried about two crazy young kids means that, look, we were doing something that scared them and their investor base. And so there's a different perspective to look at it all. And so we're like, you know what? Like, let's fucking lean on that. Like, let's fucking be like forces to be reckoned with, and do it the right way this time. Like, let's build a business the right way and combine that energy. That's exactly what we did. Like, we went back to first principles while pivoting. Like, I mean, like, I was faking toothaches. So like, when I was back at home, we were trying to find ideas, and like, we didn't want to do consumer anymore. It was too tough of a nut to crack, and we didn't really enjoy the problems that came with consumer, like high CAC, LTV, all of that. So you want to stay in like B2B?
I'm really worried because listen, like you've been listening for like what, 10, 20, 30 minutes now. Clearly you like it. And the thing is, the next episode is way better and you're going to miss it. You're going to miss it because you're not following the show. So take your phone out and hit that follow button.
Had you hired people before and let them go, or it was just the two of you the entire time?
Yeah. So we had hired people. We'd let them go with the pivot.
How many people did you get
like,
to?
It was, it wasn't that. It was like, I think 6 people, six,
Okay.
7.
Okay, cool.
So it was always like, we've always been lean, even in Affiniti to this day. Like, while we were pivoting, we like straight up went monk mode, first principles. Like, I would call like the lawn care guy to come to my house, because my dad would normally do it to like mow our lawn, and then I'd go walk up to the little truck, start asking the owner questions like, "Yo, like, how many of these like lawns are you mowing a day? Like, what equipment do you buy? Like, how do you buy the equipment? What software do you use to buy the equipment?" Like, asking these like SMBs these questions. I'd look fake toothaches, go to the dentist, and be like, "Oh, like, yo, dude, like, what's that brace called? Like, how much do you pay for it?"
But you literally, it's like any industry is fair game. Like, you guys don't even have an idea of some industry you like that you want to go deep on.
Yes, exactly. We were like, it wasn't just SMBs. Like, I was talking to Fortune 500 CEOs. I was talking to like VC-backed founders. Like, I was just trying to understand what part of this economy is hurting. Like, who is hurting the most? Why are they hurting? Why are they ignored? And like, just by talking like to hundreds of different founders in all shapes and forms, it kind of led us to this premise, like this thesis at Affiniti, where
What were you looking for, by the way, before you get to the thesis? Like, were you looking now? Because before it was like crypto was hot, is kind of how you started, and then were you now like, at least were you focused on problems? I mean, that's kind of what it sounds like. I don't want to lead you, but
yes, exactly, problems. What problems are businesses facing? And the problems, like, we literally spent 2 months deep into insurance, which, oh my God, such a boring space. Look, I'm sorry to all the insurtech founders, but like, you have to really love that space to be in it. And there were a lot of problems to solve that we hated insurance. Like, it was unbelievably bureaucratic, archaic, slow, and we just like, there were problems to be solved, and we don't want to be the ones solving those problems. It's kind of a TLDR after 2 months. So like, we kept exploring, and the premise we kind of fell upon is old industry, small businesses seem to be hurting the most in today's economy. And why do I emphasize old industry? It's because, like, I'm not talking about drop shipping businesses or Blank Street Coffee in Tribeca or Sweet Greens, the franchise owner. Like, I'm talking about Joe Schmo, who started an independent pharmacy in Little Rock, Arkansas in 1958, and he passed it on to a daughter or son, and now they're running it, and they passed it on to their offspring, and they're running it. It's a third generation family ran business that does $12 million of revenue. It's that business. It's the dentist who started in 95. It's that business. Those businesses seemed to hurt the most. Why? Because the stacks they started their businesses with never adapted. So the same payroll they used, the same card, the same bank account, the same software providers, the same POS system, nothing changed from 95 to 2025. And when we made that realization, and we actually took the inverse, we looked at why private equity firms were rolling up these verticals of old industry. What we realized is what PE firms were simply doing was optimizing workflows. efficiency. And that was their alpha of why they think they can roll up every dermatology practice in America and flip them to 10% greater EBITDA profitability. And so we're like, oh, whoa. If we can bring this private equity efficiency to this old industry SMB economy, which is shrinking, we could unlock prosperity and help these people thrive. And what do we know best? Fintech. Why? Because we built in this intersection of fintech and crypto. And so we thought we were best primed to build financial technology to modernize their current kind of stack of corporate cards, expense management, bank accounts, bill pay, analytics, FP&A, all accounting, taxes. We are best positioned to come in and help them modernize that part of their stack. So we did that.
Walk me through before we go into the solution, like just some of the specific conversations that you had with these types of SMB owners, like whether it's maybe it's the first one or maybe it's a key one that you can walk me through, like, and what you were hearing from them.
So there's this one conversation I remember that was very that stuck with me is I was talking to this business owner. He ran like a $60 million HVAC business, still like an SMB. He has like 50 to 100 employees, but he runs it like an SMB. And I asked him, I'm like, hey man, like, how do you know what your employees are buying? Like you have 50 employees, you're not managing them every single day. And he's like, oh man, like I just used my, I just issued them an Amex card. And I'm like, okay, like, do you know what they're buying still? Like you can buy something at a gas station that's $13, but do you know what that $13 is made up? He's like, now that I think about it, I actually don't know what they're buying. So I'm like, okay, so like your employees are your fleet drivers, they call it, are going to these gas stations and they're buying $13 of BP. And you don't know if that's gas or beer or cigarettes. He's like, no. And I was like, does that not scare you? And he's like, no, I just trust my fleet drivers. And I was kind of like confused. I was taken aback, honestly. I was like, why is he not worried about that? And then what I realized was like, because small business, like the industry of small business is such a trust-oriented industry. I wouldn't say he doesn't know better, but I guess he's not underwriting every scenario of this business. And so what actually happened was we onboarded his business. We gave him cards. And within 1 month, he fired an employee for abusing the cards because what he had found out was the employee was buying batteries on his tab for over a year that he had not caught because Amex does not require you to upload receipts upon spend. And so for over a year, someone was buying batteries on his tab. And when he saw that, they were just suddenly, oh, okay, now I'm understanding why this matters. Like, I think like SMBs, and this was like disappointing initially, but when he got it, I got excited because I'm like, okay, this is why people have not penetrated the small business market. Is because look, Steve Jobs has a great quote about this. People don't know what they want until you give it to them. And SMBs have this similar mindset where like they're stuck in 95. You have to show them what's possible in 2025. Because if you want to compete against KKR, Blackstone, BlackRock, you need to have the same workflows and efficiencies as KKR, Blackstone, BlackRock. And so when we showed him that, like now this guy adopts every product we launch. Because he's like, okay, whoa, like these guys are like seriously enhancing my everyday financial workflows. So that was like a great example of like from pitching him, hearing him out, to him actually getting on our platform, to like us actually unlocking productivity and showing him outputs and outcomes.
Was there another one that, you talked about problems like that really kind of surfaced up? I mean, because you have the macro problem that you see, KKR, Blackstone, et cetera. But I don't know that most SMBs see that until maybe it's too late, you know what I mean? But were there other conversations that actually surfaced, like the day-to-day issues some of these people were facing that they knew about?
Oh, yeah. I mean, there was like one business, they were using their personal card to fund their SMB. Look, like he had a personal Discover credit card. He would hand his personal Discover credit card to his employees to go to Best Buy, go to this thing, and he was sharing his personal credit. Here's the crazy thing: with the personal credit cards, utilization affects your credit score. So this dude was putting $30,000 worth of purchases, and his credit score started nosediving. So his mortgage payments started rising. And then the loans for his businesses all hiked in terms of pricing. And so, look, we were like underwriting this guy's business when he told us this entire backstory because we were his first SMB card. And we're like, dude, like, look, why did you not apply for a business card? And like, he was like, man, like, I didn't really understand the difference between a personal and a business card. And we were like, dude, you've been running an HVAC business for 3 to 5 years. Like, look, what do you mean? Like, know what a personal versus business card? Because like for some people, they see it as points and cashback. They don't see it as anything else. And I think that's largely what the SMB economy looks at with cards for. And like, that's what makes this compelling is look, we're trying to show them that there's software value to financial products.
So these are the problems, and you decide you want to bring this efficiency. Is first of all, what time are we talking? Like second half 2023 at this point? Where are we at?
Where we launched this?
Yeah, or like where you're starting to build whatever V1 is.
Oh yeah, first line of code December 2022.
Okay, and what do you decide is that MVP?
Oh, we launched like a really shitty card platform. Like oh my god, like we the first transaction, look, the first 100 declined. Like for our SMBs, look, we onboarded like these like 10 businesses through like email marketing, because like we'd found them the leads list, and like we were emailing the leads list, and we got them to apply. And at the time, we had to do video calls to verify because our like KYC was pretty shitty as well. So like we would like get on video calls, see if they're real, and like the first day, it's like they start using the card, decline, and like they're like freaking out because they're like, dude, like what the hell's going on? It's embarrassing to be getting declined this many times. We're freaking out. We're like, why is it declining? And like, here's the problem with fintech payments in general is like, there's so many third parties that like you have to like figure out which third party is fucking up the payment flow. So like, okay, we resolved it. They swiped again. Fuck, now it's another party that's failing. We resolved, and it was just like, it kept failing. Like we had more declines than approvals, like in the first couple days of the card.
And then, but you saw that. But what are you just building Brex for SMBs? Like, what is it that what's the idea?
Yeah, exactly. Like I think like the main alpha that we're trying to uncover is like we're not actually trying to build for finance teams, and that's what Ramp and Brex do, right? Their whole focus is we want to build for CFOs, but like SMBs don't have to. What we're trying to do is we're trying to be their finance team. And what does that mean? And it's sort of why like this AI agent play it's like what we're really focused on helping come to fruition is like I think like in organizations there's two types of people. There's catalyzers and there's maintainers. Catalyzers would be like an engineer at a VC-backed startup. They're building net new products and they're catalyzing the growth of your company. Then you have maintainers. Maintainers are finance people are going to hate me, but it's CFOs. They tell you about your business. They're not going to 2 to 3x your valuation tomorrow, but they're going to tell you, here's your cash flow, here's your monthly statements, this is your accounting, like this is what your balance sheet looks like. We think maintainers are the ones that are going to get disrupted in this like AI revolution. And what better way to disrupt a maintainer than to be the maintainer for SMBs? At the end, most SMBs in America will never hire full-time finance functions. They're just not big enough to afford a CFO from Wharton to go run their books every single month. So the idea here is if you want to become the maintainer, you have to have the same knowledge base as a CFO. So the same understanding of a business. So why did we go with the credit card to market? Now we start knowing what they're spending on. Why are we launching bank accounts and bill pay? Now we know what's going through their bank accounts. Now we understand what they're ACHing to. Why are we doing things like accounting integrations, point of sale system integrations, accounts receivable? The more data we collect on the business, the better understanding we have of what's going on. And what does that actually translate to is you could potentially start to make financial decisions. Exactly what a CFO would do. You could generate monthly statements, P&Ls, balance sheets, cash flow statements. You could build things like runway models. Exactly what a CFO function, you could provide this platform for owners. So if I'm a small business owner, I log into my platform. and I click like CFO tab, and I could do something like create the last 3 months P&L for me, and we can leverage the data because we are your platform for everything. We could create a pretty accurate P&L for the last 3 months. That's where we want to go. And it's a pretty ambitious vision, right? To be able to get that data, it's going to take time. But the beauty is with each product we launch, we make money. So like this is at scale what it looks like as an AI CFO. Right now, what it looks like is a ramp or Brex for SMBs.
It's interesting, right? Like you think about the long-term vision, that's obviously AI enabled. And that's the kind of, you think about timing and why now. But when you just mentioned, right, we're just doing Brex for SMBs right now. I mean, Brex comes into play. Yes, they serve finance teams today, but it kind of comes into play because it's like, hey, startups are this new revolution of things. I mean, it existed for a long time, but like this kind of professionalization of startups is creating a whole class of things. Banks can't serve them, so like we'll serve them because we know which startups should get credit and which one shouldn't. But in the world of SMBs, like that's been around for a long time. Banks been around for a long time. Credit cards been around for a long time. So what are you bringing as in with your wedge that's giving you so much traction today? Because the SMBs, they might be interested in 5 years, but they're going to buy a real product that works right now.
Of course. Here's the thing. 70 to 80% of our SMBs, do you know what they're using before us? Community banks and credit unions. So small businesses in America, people ask the question, how are these credit unions and community banks like existing? Like there's the big four, and then there's fintechs, SMBs. SMBs primarily work with the local banks and credit unions. 70 to 80% of them use these banks and credit unions.
Why is that, by the way? Is that just historical, like status quo stuff, or is there a reason?
I think like a lot of small businesses, at least the ones we work with, these old industry ones, it started as a local relationship. Grandpa or grandma went to whatever First Federal Credit Union of Little Rock, Arkansas, and they knew the CFO, and they built a relationship, and it's just lived
Status quo, but no big reason to switch. Yeah, that makes sense.
exactly right. So you have this thing, and then it's on the flip side. Not look, you have all these businesses that are on like these old credit unions and community banks. On the flip side, SMBs have an exposure issue. What do I mean by that? Why do people not come after the markets we go after? It's because we have a differentiated go-to-market strategy to acquire these customers. So, like, I get the common question investors come to me with is, look, what if tomorrow Ramp and Brex come? They want to compete with you guys in the same market. I say bring it on. The reason I say bring it on is because the way we go to market is we partner with trade associations and unions that represent SMBs. We leverage their brand, network, data, trust to acquire these SMBs at a very, very significantly more efficient CAC. What if I'm trying to acquire 10 pharmacies in Nebraska and Ramp is trying to acquire 10 pharmacies in Nebraska, I can almost guarantee you we're going to have 25% of the CAC cost that they would pay to acquire those 10 pharmacies, because we are leveraging the brands of the National Community Pharmacists Association, where their CEO is smiling with the card in his hand. He's saying, I'm an industry veteran. I'm using this for my pharmacy. You should be too. Versus, oh, these guys raised at $16 billion valuation, like from these investors. And like Joe Schmo doesn't care. He doesn't even know what VC is. And so he's not making his decisions on those kind of like metrics or requirements. And so,
how do you land on that as a go-to-market?
Yeah, so there's this bank back in the 90s called MBNA. They're one of the largest banks at the time for credit card issuing. And the way they went to market was they partnered with Affiniti groups. It's why our name is Affiniti, because Affiniti groups are when you partner with nonprofits. So look, co-brand versus Affiniti. People ask, aren't you just co-branded cards for trades? I'm like, no. Co-branded cards are with for-profit groups. So like American Airlines and JP Morgan. Affiniti cards are with nonprofit groups. So like American Medical Association. If I did a credit card with them, it's an Affiniti card. And so MBNA was the largest Affiniti card provider. They'd partnered with all the universities. So like if you went to Harvard and you got a Harvard credit card, it was an MBNA card. back in day, and they partner with all the trades. So like American Medical.
And is it the same take? Like they get interchange? That's like the upside of partnering with you?
Exactly, right? They get like some sort of economic incentive as volume increases. And so they're helping us acquire at a lowered CAC. And now what we look like, Pablo, to them is novelty. Because I'll be totally honest with you. So like we benefit from the fact that they don't know that Rampant Brex and Mercury exist, right? Like they know First Federal Credit Union exists and JP Morgan exists. So when you bring Affiniti, this new fintech, modern card platform, expense platform, like sleek UI, like you can issue employee cards within 10 seconds. You offered this like novel fintech platform. To them, it's like, holy hell, where has this been? And so we're benefiting from acquiring populations where, like, to me and you, a lot of what we've built today is table stakes, but to them, it's novelty.
And how do they penetrate the market for you? Like you have an association. Like what are they doing? Are they just like they have events and they show a banner? Like how do they get SMBs on board?
Direct mail, emails, conferences, trade conferences, old school marketing men. Like literally some of them have people driving around the state.
Do you support that marketing expense or you just give them share of economics and they take care of it?
Both. So like some of it's off their balance sheet, some of it's off ours, but like we'll support them.
Because this is the thing about SMB is you have to find a scalable, repeatable, and relatively cheap and differentiated way of going to market because, you know, and especially for something that's non-trivial like this, which is like, you got to get them to switch credit cards. Like they probably got to understand, you know, how the whole thing works. Like you can't just be calling these guys. Like it's not going to be great conversion.
Totally. I mean, the awesome thing with us is we'll never need to hire account execs because our sales cycles are literally off one email or off one DM. Look, dude, we acquired 2,000 small businesses within like 14 months. We have one growth guy and we hired him 7
You don't do
months ago.
like there's no demos? Like they just onboard, they self-serve?
We don't do demos. we don't have an AE. This is purely like off our like marketing landing pages where they're just scrolling through and they're like, oh, employee cards, expense management.
Yeah, what's the thing? That's the question. What do you find is the biggest hook? Is it like the amount of cash back? Is it the employee management? Is it the visibility? Like what's the thing that really gets them to switch?
Yeah, I think like it's different per business. Some businesses really value rebates. Other businesses really value controls. So like they would rather but have majority of their like setup be like, look, spend limits, expense like receipt management, accounting integrations, and they don't care about the rebates. So like, look, how we structure our cashback is if you pay us faster, we give you more cash back because we take less credit risk. And so and we'll have like a portion of our platform that cares a lot about rebates. They pay us back faster. Then you see the flip side where we have a portion of the platform that cares about float, expense management, like controls, accounting, and so on. So like we built this platform where we could serve every type of use case for an SMB.
When was the public launch? Like mid 23 or so?
No, it was March 2024.
March 2024. And then by the end of 2024, like November, you raised an 11 million seed round. Where's the business at that stage?
We were about like $3 million of revenue. We had like 800 customers. It was like we started really ripping towards the end of the summer.
And you charge what? Like there's interchange fees and stuff like that, but you also charge what, per seat or per what? Per card?
So we like charge right now it's technically custom. So like certain larger customers, we charge them like a really large fee for expense management. But like smaller customers, like small businesses, we charge about $60 to $120 for expense management. But honestly, that's like a nominal, per year. So it's like recurring software. That is not like a ton of our revenue. Like I think like software is about 15% of our revenue. Majority of our revenue comes from interchange today. I think like our philosophy is like, why charge a customer today when I can give them this platform? I could replace 10 things and then I could charge them more tomorrow. I would rather take that route than like try to figure out the profitability game like tomorrow. Because look, I would be super naive to sit here and say I could justify a $5,000 platform fee today. I can't do that. And I think that's why I kind of admire Ramp actually, is because Ramp realized this. Ramp would I'm not going to be able to justify a charge to a startup founder in 2020 when all we do is receipts and cards. Look at Ramp today: travel, procurement, treasury, cards. Literally 10 different things. Now what's Ramp? Ramp, it's charging now for seats. And I think they hit $100 million of software revenue already. Because now they've actually allowed their platform to mature enough from a value proposition perspective where they could justify charging. And I think I take a very similar approach there.
I mean, and the other thing, I mean, there's a lot of SMBs, there's a lot of credit card spend. So if you get a share of that, there's a huge market right there.
Oh, yeah. I mean, the average business on our platform spends probably close to $250,000 a year on cards.
How many people are you now?
We're right now 15, soon to be 18.
Oh, wow. So you're still a small team because you're doing what? You're probably getting close to 10 million?
Yeah. I think we'll be there in the next 45, 60 days.
That's awesome. Maybe tell me just quickly how your Series A happened.
It was really quick. Within 3 weeks, we got a term sheet, and we got it done in a month. How did it happen? Pretty much, we were growing so fast we were going to die in 60 days. The problem with card businesses is they're very capital intensive. So you have to lend money, you have to put it as collateral, you have to stomach losses, and so
and you're using your balance sheet for that at that time.
At the time, we'd raised some debt.
Oh,
we
you
had
had that.
line.
Okay.
But even with the line, you have to collateralize some of the loans. So it's we're growing way too fast. We're shit. We're gonna be illiquid. So that's the problem, right? We're not technically out of money.
Yeah,
we're
you're not
just
insolvent,
illiquid
yeah.
because you have to collateralize. Exactly. So we're okay, we have we have to raise in the next 60 days. So Aaron, we make the classic joke where we're we tell all the VCs we're gonna be in Sand Hill Road 30 days. That's all. You either see us or you don't. And so Aaron literally does that, and he takes 100 VC calls in person in SF. We do a rodeo and got term sheets. Ended up choosing Signal Fire and went from there.
When did you close it?
Well, formally, or term sheet, or definitive agreement.
I mean, I guess definitive.
Definitive close, I think April. So
okay, a few months ago.
Yeah, they did all the DD. They had to do cap table reviews, preferred board seats, all of that. Yeah, took quite a long time.
That's awesome, man, dude. Well, freaking crazy story, buddy. Crazy story. Appreciate you sharing it. Let me ask just the last few questions that we always end on. First one is when did you feel with Affiniti? When did you feel that you had true product market fit?
When customers kept calling in to ask us to build new products for them, that's when I knew we had product market fit. I think every day now we get one call that asks us for a new feature. Which means customers want to move more and more of their financial activities to our platform because we're obviously delivering on something that is drawing them to come back for more.
And then last question, if you had one piece of advice for other early stage founders, what might that be?
Stoicism. This is a game of stoicism. Honestly, you have to be able to stomach bad news consistently every day. Growth is not going to happen. You're going to read a bunch of articles on TechCrunch or whatever where you're seeing startups raise billion-dollar rounds that started in 2021 or 2022, and you're sitting there and you're still seed stage founder. Stoicism, play the long-term game. Think about where you're going to be in 10 years and not 1 year, and get comfortable having bad days. That's something most time in life, people try to strive to have good days. I want to be happy. I want to make sure everything in my life is perfect on this Sunday afternoon. That's not the life of a startup. Customer's going to turn. Employee's going to quit. You're not growing fast enough. VC's pissed off. Get comfortable. Be stoic. That's my best advice.
Awesome, man. Dude, thanks for jumping on the show.
For sure. Thanks for having me, Pablo.
Wow, what an episode. You're probably in awe. You're in absolute shock. You're like, that helped me so much. So guess what? Now it's your turn to help someone else. Share the episode in the WhatsApp group you have with founders. Share it on that Slack channel. Send it to your founder friends and help them out. Trust me, they will love you for it.